Welcome to the Income-Related Monthly Adjustment Amount edition of Medicare in Minutes, a micro-learning series brought to you by Action Benefits. Beneficiaries with higher incomes may be subject to an Income-Related Monthly Adjustment Amount, or IRMAA, when enrolling in Medicare Parts B and D. IRMAA was first applied in 2003 to Part B coverage. However, IRMAA was expanded in 2011 to apply to Part D coverage as well. In both cases, IRMAA was implemented to financially stabilize the federal Medicare program by shifting a greater percentage of the cost of coverage to beneficiaries in higher income brackets. For instance, IRMAA-free Medicare pays approximately 75% of the Part B premium, leaving beneficiaries with a 25% share of the total costs. Beneficiaries with higher incomes, who are subject to IRMAA, pay a higher percentage of the total, 35, 50, 65, or 80%, depending on the level of their income. The same principle applies to Medicare Part D. IRMAA is determined using the beneficiary's Modified Adjusted Gross Income, or MAGI. As the name suggests, this figure is adapted from the adjusted gross income used to determine a beneficiary's tax bracket. The MAGI adds back a number of uncommon deductions, including student loan interest, passive loss or passive income, IRA contributions, and rental losses, among others. It is possible that a beneficiary's adjusted gross income and MAGI are the same or very similar. Should beneficiaries be assessed IRMAA, they will receive a mailed notice from the Social Security office. This notice indicates the amount required for their Part B and/or Part D coverage along with their assessed IRMAA. The notice also details the appeals process for those who wish to contest the assessment of IRMAA. Meet Mortimer and Laura. This married couple is looking to determine their monthly premium as they turn 65 and become eligible for Medicare. Mortimer and Laura have been filing their $900,000 yearly income together for decades and plan to enroll in both Parts B and D of Medicare. As stated earlier, IRMAA uses MAGI to determine if a beneficiary qualifies for an adjustment. Since Mortimer and Laura's MAGI surpasses the highest level, they will be responsible for both the base premium and the additional adjustment. The exact amount varies from year to year, but for our example, let's use the most recent figure. This brings their Part B premium to the figure on your screen. Both Mortimer and Laura will have to pay that number separately, so that brings the couple's total for Part B to the number displayed here. A simpler yet similar process occurs when determining the cost for Part D, but the total will vary based on the individual's Part D plan. Again, because Mortimer and Laura surpass the highest income level, they will be responsible for the highest adjustment, which for Part D is a flat rate, plus the base cost according to CMS's current year Part D average. That average is on your screen, along with the current IRMAA rate and base. We will use these numbers for now. Adding these two figures gives us the total for one, and multiplying it by 2 gives us the total for the couple. In reality, fewer than 5% of beneficiaries are affected by IRMAA. Beneficiaries are able to appeal IRMAA if they so choose. However, impacted beneficiaries are often surprised as understanding of these adjustments is far from universal. While shopping for Medicare can be a nerve-wracking experience, you can take steps to prevent some of the stress associated with IRMAA when working with a knowledgeable agent. Questions regarding this and all other Medicare topics can be directed to your agent. Thank you for watching.